In the game of loans, you either win or you learn. Welcome to the game of loans, where fortunes are forged and empires are built. Your hosts, lords of lending and wholesaling, are here to guide you through the realm of real estate and wealth building. Brace yourselves, cash flow is coming. Hello, and welcome to episode number 21 of the game of loans. So with me is my friend, Russell. And Russell has recently joined our team, the investor funding team. But he has a very interesting background of mortgages, investing, and real estate, and everything like that. So Russell, introduce yourself. Yeah. Tell us a little bit about you and your life and where you came from, where you grew up, and how you got into the real estate business.
Okay, great. Well, Russell Ali, I came into the real estate market. I grew up in Southern California. Mm-hmm. So I grew up in Palos Verdes, raised.
Heaven. You grew up in heaven.
I grew up in the 80s, though. Yeah. You know, it was still heaven, but
still heaven. I mean,
it was fast times at Ridgemont High.
Ridgemont High, yeah. But I mean, topography-wise.
Beautiful.
Can't get,
yeah.
It's gorgeous.
So, yeah, I love. We went, the benefit of having junior high was Fridays we had junior high PE at the beach.
Oh.
So.
Yeah, can't beat that.
Can't beat that.
No.
I was in tech before, and then that whole bust of tech happened, and I was like, all right, what am I going to do? I got into lending and went to, was doing, wholesale lending. So I was selling to brokers and working.
Tell us what the difference is between retail lending and wholesale lending.
So retail lending is when you apply for a loan, you go to a mortgage broker.
So it's that B2C,
right?
Business to consumer.
Business to consumer. So then I worked B2B. So I worked with the broker. So he would say, hey, let me check the different programs I have. Right. And I was one of his programs.
So the client would go to the broker and the broker would go to you.
Right.
Okay. So B2B.
Right. And that's kind of how I see this field where we're currently in, working on the fix and flip and the ground up. I'm back to B2B.
Yes. B2B/C.
Right.
Right. Because you're really going to the end consumer. Right. Mm-hmm. And that's important.
Yeah.
Sometimes you're going to the broker, but really it is a B to B.
It's a B because the end guy is building a property that he's going to fix, he's going to sell, or he's going to rent out. So
correct. It's a quasi, yeah.
But when that market crashed in the 2008 crash, I was like, all right, what next? I went into real estate. I had my license. I spent 20 years selling real estate, everything from land to luxury, investments, working with clients in 3 different states, I think.
Which states?
California was my first.
Okay.
Then I went to Oregon. That was my second. It was in Bend, Oregon, which is a very hot market, very tourist market. We get 3 million visitors, but only had maybe 90,000 people living there at the time.
Yeah.
And most of the people who bought homes there lived and worked somewhere else.
Okay.
So there was not really an economy to support the jobs and the pricing in the houses there. And then from there, went to South Carolina, did some fix and flips down there, and then came to Nashville.
What part of South Carolina?
To the upstate, to Clemson area.
Oh, nice.
Yeah.
Nice.
So,
very nice.
Another nice town. And then came to the Nashville area.
So you, to correct you, you've been part of 4 markets.
Right.
Not 3. Mm-hmm. Which would you say is your favorite market?
For the time that I was there.
Yeah.
Well, I don't know. San Diego was the turn of the market. So I was doing bank-owned homes. I had bank contracts with Wells Fargo, Chase, and was selling bank-owned homes, helping people with short sales, sold up and down California when that was a different time. The market in Bend was great. A lot of families moving there. I mean, we were in the outdoors all the time. So that time there was great, but that time has passed. So each one had its moments. South Carolina, interesting market, lots of opportunity, and the pricing of the homes was so cheap to buy fix and flips.
Yeah.
But that time passed too. So
here you are.
Here I am in Nashville.
Yeah, in Nashville.
And Nashville seems to me, it's a lot of people transitioning here. Yeah. It's been like a cattle call of people coming to the Nashville area.
It's still coming.
And with Oracle coming in, the market's going to grow even more. Yeah. The spread of urban Nashville is spreading fast.
Yeah.
So it's a great time to be here.
I think when it comes to Nashville, When I first moved here, like 3 years ago, it was on a trajectory up, right?
Yes.
And then the rates moved, so it kind of plateaued. So it slowed down the growth of where potentially it's going to go.
Right.
And I'm always saying that Nashville is going to be the next Austin. And
In terms of,
values,
okay.
you're going to see, a lot of people are saying, oh my God, Nashville is so unaffordable. Well, they have no fucking clue.
Yeah.
They don't know what unaffordable is.
Yeah.
Let's come back, in 6 years, and you're going to just see, the homes that today that are going for 1.6, 1.8 million. These are going to be $5 million homes.
Yeah.
Very easily.
I was talking to a counterpart of mine. We used to work together in San Diego, and he was looking at transitioning to the Nashville area, and he's like, the pricing is so high. And he says, we're just going to be on par. And I said, par? What are you going to sell your home for in San Diego? And I know he paid $500 for it back in the day. And
was he going to get $2 million? $2.5 million? $3 million, right.
$3 million.
Yeah.
And I said, you know what you can find? Because I'm shopping for houses for clients for like in the 2.5 and then 1.5. This is what you can find. And he's like, oh, okay, well, yeah. He could have got what he wants for like 1.5 out
Right.
here. I said, you're going to bank 1.5 in the bank because
Yeah.
I know your house paid
Yeah.
for it. So the looking at what the prices are today, it is reasonable.
It's very reasonable.
You're right with what it's going to look like in the future
Yeah.
with Oracle moving from Austin to Nashville.
Yeah.
The price point is going to skyrocket.
So about 8 years ago, a friend of ours decided to move to Austin.
Okay.
And we went out there with him, and the house that he was looking at was 1.65 million, and he came to me for a loan because he needed a bank statement loan. And back then I was doing non-QM loans. I owned M-Bank, and that was the only way he was going to qualify. And lo and behold, the property didn't even appraise. I was trying to talk him out of the fucking deal. Thank goodness he didn't listen to me, and he moved forward with the deal. And right now, that property is worth upwards of $5 million. You got to refinance on it. So, I mean, do
Yeah.
the numbers.
Yeah.
I mean, do the numbers. It's crazy.
So
it's
good.
crazy. And I thought he was nuts buying that house back then. I think that Nashville, not that I think, I know, I have that sixth sense. Nashville is going to follow in the footsteps of Austin.
Right.
And it's going to be untouchable. It is. I think Oracle is coming here. That's one
Right.
of the first tech companies, and watch. And that's what ended up happening in Austin. You had all the tech companies coming because it's going to be, it makes sense for them.
Yeah, because
right? 'Cause it's
Oracle
still
is
cheap.
coming here with their
Yeah.
headquarters. You're
Yeah.
going to have tier 1 and tier 2 providers to Oracle coming
Correct.
here who want to cozy
Correct.
up to that
Correct.
business. Right.
And you already have all these like battery companies and shit like that are
Yeah.
moving here. Car batteries and
Korean battery,
industry,
yeah. Huge.
and industry is going to move here. And then you're going to have the executives that are going to that are making millions of dollars. There's these tech companies that moved into Miami. Right now, Miami is unaffordable, so
Yeah.
their fucking workers can't even afford to eat.
Yeah.
So they're moving out, and what's affordable is here. As much as people say it's unaffordable, it's still very affordable,
yeah.
right? Compared to Miami, which is completely unaffordable. So,
Like in California, you had people, 10 years ago making $300,000 a year living in their van.
yeah.
I see that happening here with the tech companies coming in.
Yeah.
You already have like Amazon has a hub
Yeah.
out here. So now with the policy of moving back to work, they have to come back to the workspace. People from other areas like my old hometown, Bend, people moving from there to Tennessee because they have to
Of
be
course.
in the office.
They
now.
have to be in the office.
Yep.
Look, that's going to be a game changer, and I called that, and I've been saying the game that the Black Rocks and the Blackstones and the Vanguards were playing was destroy the commercial, office market. There was a plan in place for the past 3 years,
Right.
to massively deplete the values of high-end office buildings in inner cities, because I don't think the office parks in suburbia are fucked. They're never coming back. I don't care. And that was never their plan, and they're never going after that shit. That shit is just done, right? But you had these gem of these buildings in different places in major cities.
Major city, yeah.
Things that were selling in 2000 that sold in 2019. I think we'll have to find some of those and post them. 250 million that end up settling for like 12.5 million and so on and so forth. And these guys, these companies have been acquiring these, and then about a year and a half ago, we went with our partner, and I can't name them either, but our financial partner, and we sat down and we were in their offices about a year and a half ago. Beautiful office in Manhattan. Building is prime. And the building was empty. And we sat there in the boardroom, and I sat down with the VP of this major corporation. I said, hey, you guys are swimming in space. What are you going to do? And he turned to me and said, you just wait. Wait about a year. And I turned to my partner, Ross. I go, you see what I told you? These guys have a play. And these guys are fourth, behind Vanguard and those guys.
Wow.
So now the entire building is filled. And if you saw, with, what's his name? Jamie Dimon.
Yep.
He was very explicit about it. You don't want to come back to work? Fuck you. Go find another job, essentially. Right? And now Amazon is forcing their people back. JP Morgan people are back.
Everybody.
all these people.
Yeah.
And then what's going to happen is the only people that are allowing remote work are the smaller companies, and that's going to cease to exist too. And everybody's going to be forced to go back to the office.
Do you think this is in part the 15-minute plan that they've had for all major cities to implement that plan? Was like take control, take command of the cities, so to speak.
Yeah, take command of the cities and buy these properties. That, look, for these guys, it's always, I like to say, even in my business, right? As smart as I think I am, I can compare to these guys. These guys they're looking at things 10 years in advance.
Right.
Where I'm trying to strategically plan for fucking next week. Where am I planning out? A year from now or 6 months? How am I going to survive? What are we going to do? How is our business going? These guys are strategizing amongst each other, right? Even when this whole situation with the tariffs.
Yeah.
Right? I mean, it's such a joke. They control the media, right? So then they say, okay, panic button, put panic into the masses. What are the masses? Masses are asses. I don't mean to be an asshole, but that's who said that? Madison said that, right? One of them said it. One of the forefathers said it. The masses are asses, right? I think it had to do why they put the electoral, right, into place. Is because the masses are asses, right? They had to guard themselves from the masses doing something fucking dumb, right?
Right.
Which we see today all over the fucking place. So the masses are asses. Panic button. Destroy the fucking markets. Psht, sell on the way down because they pressed that button.
Right.
Everybody is ready. We press the button. Masses are asses. They're going to start selling. Psht, short. Put out information now. Everything is okay. Long.
Yeah.
Put another fire in, short. And what people don't understand is they're so cued into the mass media that they just follow like fucking sheep up and down and just getting used, right? And it's like people that don't follow that, even on a small scale, are the ones that are winning. And I tell people, if you're listening to the news, you're just voluntarily just turning yourself into sheep. Just don't do it.
Yeah.
Come up with the facts yourselves, or listen to podcasts, independent podcasts, and come up with an opinion yourself.
I think the next play, just like you say, the masses, just outside of real estate, the airline market.
Yeah.
Airlines, the accidents are down from last year's numbers for January, February, March.
Yeah.
And yet it is all over the news.
100%.
And you talk to people like, I'm a little fearful of flying. You see all those accidents are happening. We have less accidents. But again, if that market sours a few percentages, it makes a ripe opportunity for the right person.
For a takeover.
Right. right.
Okay.
Well, I think we're going to see a play in that market.
But then when there's less air travel, what's it hurting?
Tourism.
Hotels.
Yeah,
tourism,
hotels.
right?
Mm-hmm.
So the biggest problem that they're having right now is Airbnb is a fucking thorn on their sides.
Right.
But these motherfuckers are so rich and have so much money
Yeah.
that they can play that long game. They don't care. They will suffer through 50% occupancy rates and shit like that, where the Airbnb guy cannot.
Mm-hmm.
His threshold is 65% occupancy.
Mm-hmm.
When it hits below that 55% occupancy, they're fucked.
Yeah.
And then, they have to put the property on the market at a discount because the numbers aren't working out, and that's the plan. I agree with you, but that's why I always say, if you own an Airbnb property and you're banking on Airbnb income and that property cannot debt service long term, you're basically on a high rope without a fucking net.
Yeah,
why are you going to put yourself in that situation? Don't do it.
Which brings us back to the conversation in Nashville.
Yeah.
Because Nashville, we touch so many states and so many within 8 hours. We're within 8 hours of so many cities that we're not flying here. People drive here.
People
and
drive.
They do, and that's what makes this area so fruitful in
It
the
is.
market.
It's very true. But still, I think that the Airbnb market here is under major attack.
It's down right now.
It's
this market.
down because
I think it's like 20%.
what people do is you have influencers, right? And people say, well, you're a fucking influencer. Well, I'm different. I'm a niche, educated, 30-year-long veteran influencer.
Right.
Then you have these assholes that come into the market that have never seen cycles before, right? And then they hone in on something. And what do they hone into? Airbnb, and then they're telling the masses, great investment. This is what you're going to do. Your ROI is going to be blah, 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 right?
Right.
Then you have the builders that is just dumb as dirt too, right? Saying, well, you know what? I'm going to market this particular property and it's going to be $800,000 and so on and so forth, but not realizing that, you're putting these people, you're putting yourself in a bad position because God forbid the market changes and you can't sell it, or Airbnb changes or zoning changes. What are you going to do? And then, so these properties that could have debt serviced by themselves long-term in Nashville can no longer, right? You're going to be a negative debt service if something happens to the Airbnb market. And that's a problem. So again, I am not against Airbnb. That's what I'm known for. I'm not. I'm for smart Airbnb. Right? I'm niche, glamping, or being in the secondary or tertiary market, or if you got into Nashville at a cheap price and it could debt service, good for you, man. You're killing it.
Yeah.
But I don't think people should be investing in Airbnb properties right now in Nashville.
Yeah. Niche market would be like the Bolt House Farms, Bolt House Treehouse.
Yeah, correct.
Down by Chattanooga.
Yeah.
That's Seth Bolt from Need to Breathe.
Yeah.
They are growing.
Killing it.
Wellness, glamping, treehouse,
Man, you're completely speaking my language, right? And that is what we're gearing all of our glamping towards is experience together with wellness, right? And that's what we're going after, right? With our own properties that we're glamping. But again, I'm one of the major proponents of Airbnb. I've always been, but not in a market like Nashville. I'm just not.
Okay.
Go outside of Nashville. God bless you. There's plenty of places you can go.
I think one of the parks, going around to the national parks, looking at like the high number national parks and obviously Smoky Mountain's one of the most visited, but because you have Pigeon Forge and Sevierville. But if you look at some of the other national parks, those are great opportunities
100%.
for the experience-based Airbnb.
Because you don't have to pay that much for the land over there.
Right.
Now, can you survive? Are you going to make money going to the Smoky Mountains and buying a piece of land? 100%.
Yeah.
But a lot of people I know that want to get into the game, they don't have that type of money, right?
No.
And you're not going to the bank. No bank is lending you money to buy a piece of land. They're just not. It doesn't exist. There are some, but it has to be considered a farm, and the land has to be 5 acres of it completely fucking flat. Where are you finding that? You're not. Any land that's been flattened 5 acres is getting ready for some sort of development, right? And it's not going to be suitable for glamping. So like you said, go find something in one of those places.
What's the program that you suggest for, say, someone comes to you and they want to do a glamping camp somewhere? What kind of program are you going to put them in? What kind of loan?
I can't. We can't.
Okay.
But when it comes to glamping, what I tell people is get a piece of land that is useless for everything else but glamping.
Okay.
Right? You can't put any property on it for X, Y, and Z reasons, maybe zoning or something like that, or it's so far out of the way, so on and so forth. Secure that land where you can force the seller to understand that the only financing option is for them to do is seller financing with you.
Yeah, that's great.
Okay? Because you tell them, hey, man, no one else is going to be, A, buy this, B, I'm willing to take a chance, but I can't get financing. There's no bank that's going to lend me money. And this land is useless for anything else. Let's do some sort of seller financing, and I'll give you a little bit of a premium for the land. Who gives a shit? Give them an extra $5,000, $10,000, right? Now, you get the land owner financing. You better have some credit. Go out there, buy your first 1 or 2 glamping tents, right? It's going to cost you all in probably anywhere between $15,000 to $20,000, right? So now you have 2. You could probably make anywhere between $3,000 to $4,000 depending on where you are per tent per month, right? Now you paid off, the first 2 within 6 to 8 months, maybe 9 months. Add another 2, right? Next thing you know, you have 10 tents, right? And that's it. Just you have to be able to use your credit to be able to do that. Yeah. And and if it's not that, then go out there, speak to somebody that could come in with you and partner with you on it.
An investor.
Have an investor. There's nothing wrong with that.
Yeah.
You can't be greedy. You can't be greedy, right? Everybody wants to take the dollar for themselves, man. I make more money sharing the pie with people than I do eating the pie by myself. It's always the case. But to me, I think the new generation has a very big problem taking in partners. And that's a dumb fucking way to think about it.
Well, we heard too. I mean, you've seen it in the real estate market. People partner on Airbnbs. Then short time later, maybe a couple of years later, they part ways. They just have an agreement on it.
Yeah.
But you see that a lot. So I think people have this natural, like, don't do business with your friends.
Right.
Or don't do business with family members. I mean, but, so those are some of the things you hear people say. But you're right. A partnership works, especially with getting into the investment. And so maybe you part ways, or you sell the investment, or you buy out the investment.
100%.
Down the road, you refinance it.
Yeah, you refinance it, or you create a situation where you already know, I'm going to buy this person out. This is how I'm going to buy out. And you tell the guy, listen, give me the first $20,000,
right,
and I'll give you $40,000 back. And you have to create that pro forma. You can't just shoot from the hip. Create it, and then someone's going to take a chance on you.
Yeah.
Right. And just keep asking and asking and asking.
I think for all partnerships like that, especially in the property Airbnb zone, you need to have that as part of your exit strategy.
Yes.
Inside your plan, when you're planning that out, how are we going to separate this?
How are we going
to part ways?
What's separation is key, because not everything always lasts forever, right?
Right.
You just started working with us, and welcome aboard.
Thank you.
But one thing that we're doing is we're creating a separate business in a joint venture with one of the largest, actually the largest private money lender in the commercial space in New York City. Okay? And because both sides are seasoned, do you know where the biggest time is being spent?
No.
Is on the business ending.
Yeah.
Right?
Good.
Coming to fruition. Because, like you said, we've seen it happen so many times that we know the biggest issue always comes on the wind down.
Yeah.
And so most of the time, in our agreement has nothing to do with anything but how are we winding this down? What if one of us wants to leave? What
Right.
are we going to do? Who takes what takes who? And that is where we're spending most of the time in this agreement.
Yeah. That's great.
And it's important. And and the great thing is, again, through experience, it's exactly what you're saying. What's the exit? Let's talk about the exit, because nothing is going to last forever. Hopefully
Right.
it does. But when it doesn't, you want to be able to know, how are we finishing this? What's the fair way out? And shake hands, right? We agreed on this. At least we know our exit strategy. It was nice doing business with you. Let's remain friends. But time's fucking over.
Let's keep ourselves out
Let's
of
keep
out of the court.
And keep out, because who gets rich when you get into your
Lawyers.
The fucking lawyers get rich. I happen
Yeah.
to be a lawyer, but I don't practice. I'm the best type of lawyer, a non-practicing lawyer.
I'm not practicing. One.
They always say, what's the best type of lawyer? The joke is a dead lawyer. But I don't want to go there because I'm a lawyer. But a non-practicing lawyer is the best type of lawyer.
Yes, right. That's right. All the knowledge without all the pain.
Exactly. Just use it on yourself. So now, you've been working with us for a little bit over a week, right?
Yes, sir.
What are some of the questions that you have about the business? Or, I know you're more seasoned than let's say, Ryan, but what are some of the questions that come to mind that you might,
When you were talking, you had mentioned the builders. Mm-hmm. And are you seeing builders take out bridge loans to get them out of some of their projects to move them on to other projects to keep their people working because the market has slowed? Are you seeing more bridge loans?
We're seeing a lot more bridge loans for multiple reasons. I would say the major reason is that right now the market has softened a little bit.
Yes.
And these guys don't want to get out of the prices that are being presented to them today. So they would rather take a bridge out, right?
Hold their price.
Suffer a little bit by paying interest on the money. But thinking that, which I do agree with them, I think, this whole situation with the tariffs and stuff like that is going to come to an end. And I think before the summertime, when the market gets hot, I think the rates are going to start downtrending again. And as the rates go down, what happens to prices?
Yeah.
They go up. Right? And that's the major reason why people, I think, are refinancing is to be able to hold,
hold on and hold the value in the community.
Hold the value in the community, right?
Yeah.
And so that
Which is key important. A lot of
Yeah.
these communities we're seeing, especially in the $2 million market, seeing a little sag there.
Yeah.
What's hot right now is some of the rehab or some of the properties that weren't exactly ready to go in the 1.2 in this market, at least 1.2 to 1.9 market. Those are moving off the market quicker.
That's usually for the past 2 years, that's the market that got hit the worst.
Right. Now that 700,000, 800,000 market's the one that's getting hit.
Yeah. Yeah. I think the middle market, the upper middle class market is always the first market to get hit. Mm-hmm. Right? Affordable housing always goes off the shelves. It's completely recession or economy proof. Right? All those people are always looking for a opportunity to buy a house, and when they can get that opportunity, they're jumping on it, regardless of what the fuck's happening.
Yeah.
That middle class, upper middle class market, lower upper class market gets crushed first. Then the upper class, the luxury market, is also immune to any sort of financial situation because these guys always have money. And the rich people always get richer because in times like this, they have the money, and it's the golden rule, right? He who has the gold makes the rule, right?
Yeah.
So they go out there and they're offering,
Yeah.
they're sitting on cash. So when they're sitting on cash, what do? You can make offers that are attractive towards you. It becomes a buyer's market, right?
Right.
So on the high-end markets, they're getting some good fucking deals.
Yeah, they are.
Very good deals. Even if they're getting into a $4.5 million house, maybe that's a $5.5 million house, right? When they're going in, they're saying all cash, 4.5, and they're getting it. In a year from now, that's going to be $5.5 million. So they just so they're able to do it.
Yeah. So then now we'll shift back to this role that I'm in. In pursuing new business, as a loan officer or business development. There's the mix between the end user, the guy who's actually doing the fix and flip, and then the broker who is also out there selling loans to other people and using you as a backbone. How would you advise me to split up my business, percentage wise between broker, end user,
So
fix and flip?
when you go after the broker, remember the broker always is going to put the broker's job is going to pin you against 5 of us,
Right.
right? It's us, and then whoever gives him the best deal. It's going to earn him the most money, and give the best terms to the whoever the client is.
Client is,
right?
yeah.
And brokers aren't loyal, right?
Yeah.
Now,
I knew that as a wholesaler.
yeah,
My brokers were like, whoever's going to pay me the most,
Correct.
I'm taking your deal.
right. I think it's harder to get to the actual borrower, but it's worth the time to spend to get that client for yourself,
Okay.
right?
Good point.
That's because that guy is going to give us, you're going to come in cheaper because the broker you don't have to pay, right? So if it was a point and a half to us, a point and a half to the broker, now you can go out to the borrower and say, hey, it's not 3 points, it's a point and a half.
Point and a half.
It's not going to be 12%, it's going to be 11%, right? So you could pass that savings on, right? But also then you get to earn the trust, and you get to have that borrower, that end user be yours,
Right.
and not the brokers. And that's important.
Do you see on your team, so for some of these developers and builders that you work with, that you actually go out and visit their projects in the different states that you lend in?
Yeah. I go, especially here, I go, when I'm in Arizona, I go.
I mean, basically anywhere you vacation.
Anywhere I
you can go.
vacation, pretty much, that if we're lending to, I'm going to stop by. Like I was just in New York. I stopped by 2 places in Brooklyn that we did. And I like to do that, not to even check up on the guys, is I feel a sense of accomplishment as a lender. Like I took a big participation in that project, right?
Right.
I helped fund that and create whatever they're creating. And every time I go, I'm like astonished. I'm like, damn, look what we did, because we're part of the team. Maybe I didn't physically go out there and build it, but if it wasn't for me, they wouldn't be able to get that done. And I love that. I love what I do. I really do. I think it's a necessary part of the business, right? Because so many people are not bankable, right? They're just not. And has nothing to do with anything except everybody's different.
Yeah.
If everybody were the same, then you would have it'd be everybody would be dressed the same, look the same, but there's a mix of people for a particular reason. And different people are in different circumstances. Somebody who's up and coming is not going to be able to go to the bank to get the same types of terms or rates that, somebody who's established and been in the business for 10 years can get, right? So they need us to eventually get to that place, right? And we're okay with it. I don't think, I tell everybody, some of the builders that we have that are expanding, and I tell them, I know you're not going to use us forever, but if you ever need us, we're going to be here, right?
Yeah.
And that's a good thing. We're not for everybody, and everybody is not for us, right? I like to tell people are like, even on social media, doesn't it upset you that people don't like you and talk shit to you? I go, no, because I don't like everybody, and I talk to shit to a lot of people. I probably don't like more people that they don't like, and I talk more shit about people than they talk shit about, right?
Right.
Not in a bad way, but there's people that tick me off on social media. You've seen that on my stuff. I'll look at that stuff. I'll be like, this guy's an idiot. I'm entitled to that opinion because it's my opinion. Somebody might look at the same guy and say, he's fucking brilliant. They're entitled to their opinion, right? The same thing when it comes to my content. People could look at my stuff and say, this guy sucks. He's horrible. I put myself out there, and if I'm putting myself out there, they're entitled to their opinion of me.
Right.
You know?
Absolutely.
and just
I think you do a good job putting yourself out there. I mean, you're uniquely you. You express who you are. That's good.
yeah, but it's not for everybody, right?
Right.
I'm not for everybody, just like everybody is not for me, and that's what it comes down to in our business, right? But I'll tell you what, the greatest thing in our business, I'll tell you, is the fact that our product is money. And money doesn't have a shelf life.
Right.
And money doesn't go out of style, right? Money is never out of fashion. It's always fashionable, and everybody always fucking needs it, right? Now, you are in a unique position where you could go out there and reach out to the masses, and there's going to be more people that are going to need money than more people that aren't going to need money, right? And there's going to be more people that are going to need our type of money than any other type of money,
Yeah.
right? Because at the end of the day, people that fall into that bank money are a lot less than the people that fall out of the box. You know?
Out of the box, yeah.
So when I got into the business, the reason I fell in love with lending was because I got into the business of, I always liked the underdog, right?
Yeah.
And when I got into the business in 1989/1990, I was 17. I worked for an FHA lender. And believe it or not, back then, FHA was not as popular as it is today.
Right.
And the FHA loans were created for people who were underserved in the lending market, right? It was for people that didn't have the best credit. It was for people that didn't have the best credit. It was for people that didn't have top tier jobs.
Yeah.
They didn't have that much money. They couldn't go to a bank. And back then, to get a conventional loan or get a loan from a bank, you had to have 20% down and everything had to be pristine, right? So the underserved markets were not represented.
Right.
And I really loved that. And it was like, you know what? Shit, man, I'm going to be an FHA lender because FHA is helping the underdog, right?
Right.
And for a long time, that suited me. And people appreciated that. And my clients would always come back for a refinance and things like that. Lo and behold, fast forward to a point where today, everybody's doing FHA loans.
Yeah.
And it's become...
It's for everyone now.
It's for everyone.
Before, it was like if you pay your bills, but you just don't have the income, you
Yeah.
have good, your credit's okay,
And you know
we
what?
have a loan for you.
When I used to close the deals, my clients used to thank me and hug me and kiss me and
Right.
send me gifts. And today in that business, it's over. Now they're leaving you. It's become so different where you take the deal, 90% through, they get a call from some asshole from another company that promises them an eighth off of the rate. Right? Which even in their minds are so dumb they can't even calculate how much that is. Right? It's
They take the deal.
I can say whatever it is. It's my fucking podcast. So they're so fucking dumb that they don't even realize, right? And they're going to leave you. And there's no loyalty in that business.
No.
And then when you close that business, you're never going to get the refinance. You're just not. Whoever's servicing the loan is going to call them and offer them a deal.
PennyMac's big on that.
PennyMac's going to call Chase. And they're going to offer a deal that you're never going to be able to touch.
Right.
So say la vie, and more than likely, that client's not even going to be happy with you because you want to know why? Some other asshole that they know that's a cousin of a cousin got an eighth difference in the rate, and you're a bad guy and things like that. In our business today is very similar to what FHA was meant to me, right? Because I'm still serving that underserved guy, but now in the real estate investor community.
Yeah.
And they're still thanking us and patting us in the back and coming back to us, and they don't really care about the rate as much. They just want the leverage or the opportunity to be able to get money to do something great. That's what we do.
Question for you. Someone who has, say they have 3 to 10 million, right? They've invested in the market, they have this money, they say, I want to loan this out to people to invest. How would they go about like connecting? Would they connect with someone like you to lend it out if they don't have the means? I mean, how would they make that money work for them? I just had this question posed to me the other day.
The worst thing that someone could do in that situation is try to lend their money out on their own, because they're going to lose every penny of it.
Right.
They're not going to know what to lend on. It's almost like
they're not going to how to securitize it, who they're lending to, do the background, all those things.
They're not going to know any of that stuff, right? And unfortunately, there's more bad people out there than there are good people, right? And the bad people, I shouldn't say that. There are probably more good people than bad people. But I'll tell you this. The bad people have a very good way of finding people like this to take advantage of them.
Right.
And it's like, how I like to say it is usually doctors, right? And I try to explain to them, hey, man, you went to medical school. You're an expert in, I don't know,
gynecology.
Gynecology.
Right.
That would be like me going in and try to deliver a fucking baby.
Right.
Right? Am I going to be successful at it? Maybe the first one if nothing goes wrong, but if shit hits the fan, what's going to happen? So it's the same thing. And that's what they don't understand. They downplay the idea, oh, it's just lending money. It's not. It's not. It's being able to evaluate. It's being able to put the right agreements together that the guy's not going to screw you. So to answer your question, I would 100% reach a lender that's a private money lender,
right,
and ask them, say, hey, I have this much money. I want to put it on the streets. Can I partner with you? How can I partner with you? What can we do together? What do you recommend? And do it that way.
Right.
I would not do it on my own.
Would someone come to you to do the same, to do that?
People can come to us. We're fortunate enough where we don't have a shortage of funds. We have more money right now coming from like insurance companies and places like that.
Right.
Where typically speaking, these people are going to be looking for more of a return. And when it's their own money, they're going to want more of a return for their money than we could potentially offer them.
Right.
So what I usually do with people that come to us, because we get a lot of people, right? Oh, I'm sitting on $3 million. I'm like, not to be a dick, but $3 million, it's not going to go far, in my world. It's just not. It's a deal and a half. What I tell them, again, not to be an asshole, I tell them, look, maybe it doesn't make sense for you to lend money because you're also looking for a type of return that I won't be able to give you just to put your money out. You're not going to make 13% because I have to make something on this, right? And I'm not looking for that. What I'll tell them is, let me put you in a situation where you can make that type of return. If I'm lending, maybe I'll put you in on the equity side of it, right? And on the equity side, you can earn X, Y, and Z. Maybe, we know somebody that's looking for a second mortgage, right? And it's secure because we're on the first position. Then I can make you 15 to 18% on that. Still more secure stuff, but something that is more tailored to them. And they can make some good returns.
Yeah. I think that would be great to, and there probably is out there a vehicle for them to park money in and share in the
100%.
Like
there is.
It's like
there is. There's a lot. We're making returns for people anywhere between 15 to 20%,
which is
annually is great. But it's different. We know what we're doing. For them to do it on their own, again, people get greedy.
Right.
And they're always looking at your pocket. Well, it's my money. Well, how much are you making? What the fuck do you care? Well, I can make 3,000% on your money. Are you happy with making 15% on your money? You concentrate on you. I concentrate on me. Right?
Right.
And a lot of people don't think that way. And I try to tell them, when you're putting your money in the fucking mutual fund or whatever it is, are you asking the mutual fund manager how much they're making on yours? No. Don't look at my pocket. Look at your own pocket.
Guaranteed, they're always complaining.
Of course they are, but So, good questions, Russell. Very good questions. What else?
I'm trying to think of another question. Hey, I will say this: I have 5 kids. Amazing wife, wonderful wife.
You do?
No, I have a great wife.
I know your wife.
And but I did deliver 4 of those babies.
Did you?
Yeah. We had a midwife in another room.
Okay.
You know, we went through all the processes, but God's designed us in a way to do that, right? So,
Okay. So maybe we change from gynecology.
I'm part-time gynecologist.
To you're part of that. Let's move to like brain surgery.
Right. Brain surgery. That's different.
Or things like that, or being able to it's just
But I hear you.
I know what you're saying.
Let the specialist be in the specialist
Let the specialist be in the specialist role, right?
Right.
Even if you want to make some money, I always say, like, whenever I pick anyone to do any sort of business with, if it's an attorney, I'm going to pick the best attorney that I could afford for the job.
Absolutely.
If it's an accountant, I'm going to pick the best accountant, particularly for that particular role, even, right? Like, if I'm cost segregating, I'm going to find, somebody that specializes in cost seg, right? If I'm doing X, Y, and Z, I'm going to ask them to do this. So go to the specialist, trust the specialist, and if you're going to partner with them, partner with the best guy in that business, and take what they give you and be gracious about it.
I'm seeing more people, and I know we use like Brian Yormack.
Yeah.
Have you had him on your podcast?
Brian, I have not had Brian.
You gotta have him on your podcast.
I should have Brian.
He is a whiz.
Brian is very smart.
Well, and I find it fascinating that now I'm starting to get marketing calls from other tax advisors on cost segregation, which I hadn't had before. So it's now gaining more popularity.
Because again, it's the new key word.
Right.
Influencers, they got a hold of that, and now everyone. Meanwhile, we've been cost segging for centuries. Like I've been fucking doing that since the '80s. That's what.
I am surprised at how many people haven't done it.
But that's what real estate investors do. That's the whole point of getting into real estate investing is the advantage of the tax laws,
right,
over anything else, right? It's savvy real estate investors don't pay taxes. It has nothing to do with anything else. They're not geniuses. That's why they got into real estate, right? So, who's the most famous real estate guy that we know?
Well, Trump is in the market.
Donald Trump, right? Because he marketed himself like a motherfucker.
Yeah.
But are there more successful real estate guys than Donald Trump?
Right.
Man, I know so many. So many that are more successful, that are richer and stuff like that. But he's the most renowned one, right? Let's just say
it's good marketing
outside of Carl Icahn or these guys. But a lot of people made a big mess about him not paying taxes in his fair share. Well, what the fuck is he supposed to do? The laws are out there,
right?
And he's going to take advantage of the laws to reduce his tax liability.
I think even if you look at this, the people who are even complaining about him, even in the Senate and the Congress, they're all taking advantage of every tax law possible as well.
Are you kidding me? Insider trading, that's a whole other
whole other
situation.
thing. But every development, you develop, you build houses.
Yeah.
Okay, well, you have to build some condos so you can offset those houses.
Yes.
Right? You're going to maybe do something for the local market on low income.
Yeah.
You get a tax break.
Yeah.
So you can continue doing
That's
what you
it.
do, right?
I mean, this is why we do business, right? It's and again, the smart, savvy real estate guys hardly pay any taxes. Right. And I know multi-millionaires, billionaires that have zero tax liability because of the way they set up their businesses from the beginning. So be smart. Right. That's why I tell people, get into fucking real estate. Now, when you get into real estate, don't make the mistake of going to H&R fucking Block because you want to save money. You're an asshole if you do that, right? No, I'm not talking shit about H&R Block, but when you start to be, getting to real estate investing, you're getting into it because everything else, your tax strategy, you have to find a specialist and pay money for that.
Right.
Right? Too fucking bad. But I guarantee if you're paying 2 times or 3 times as much for your tax guy, but he's saving you a lot more than what you're fucking paying him. So do the right thing. Be smart. When you're getting into real estate, find that expert, tax expert in real estate, and start using them.
Yeah. There's also some good books out there on tax strategies too.
There is.
I think some of the authors from the Bigger Pockets podcast.
Those are very good.
They have some great books.
Well,
on
at
it.
the same time, you want to, again.
Yeah.
Look,
But you want to find a good person to help execute the
I read a
strategies.
lot about a lot, right?
Yeah.
And then my CPA is so smart. I'll fucking be throwing shit at him like a AK-47, like pop, pop,
Yeah.
pop, pop, pop. When it comes to tax time, he's like here we go, 30 minutes of fucking dodgeball with Steve Afra, right? It's true.
Yeah.
Because I'm coming at him from everywhere. Because again, I want to lower my tax liability. That's the whole point.
Right.
And don't, that's not unpatriotic. Trust me, I fucking employ more people than you could ever fucking think about. And I make people a lot of money. But when it comes time to tax time, but the good thing about my CPA is, and I call him Negative Nancy sometimes. I'm like, fucking dude, Richard, you're a fucking Negative Nancy. Stop saying no to me. But he keeps me out of prison. Because he'll tell me, you're looking at... You're looking at one part.
Yeah, that's right.
It's like you read, and his famous statement is, but you didn't read on.
Yes, right.
Right? You read it, but you didn't read on. And when you read on, you don't qualify for X, Y, and Z. And I'm like, motherfucker, he fucking said no to me again. Then I go, pop, pop, pop. Dodgeball. You read, oh, I know fucking Richard. I didn't read on. Now what it is. But that's important.
Yeah.
Then he'll come to me and say, but you had a good idea here. Steve, what if we do this? Now, if you see what I pay the fucking guy, you'd be like, this guy is crazy. You're really paying this much to your CPA? Fuck yeah, I am. Because A, I don't want to go to prison. B, I pay him because he deserves it. He's saving me so much on taxes every year. He deserves to get paid. I don't mind cutting a check to people that deserve it.
You should bring him on as a podcast guest.
He would never come on because he's smart.
He is smart.
He'd be like, no fucking way, I'm not. The good thing about him is that he used to work for the IRS as an attorney.
Oh, okay, there you go.
So, and that's why I got him.
He's not only an accountant, he's an attorney.
That's right. He's a tax attorney.
Yeah,
right?
that's good.
And again, he's one of the best in the business. But he deserves to get paid as such.
Mm-hmm. It's interesting when you say people who take advantage of the tax laws and they don't pay taxes. Mm-hmm. I think back in the 2015 timeframe when we were kind of going through that whole tax thing, I looked it up and someone had made this fact that only about 165,000 people, like in the wealthiest, in California. Now we're talking about 33 million people.
Yeah.
But 165,000 people in that state, entities, make up what is California's
80%?
California's operating budget.
Yeah, of course. Yeah.
165,000 taxpayers.
Yeah.
So the rest of the people who are complaining about
40 million people fucking living for free. Yeah.
Right.
It's crazy. They did that study in schools where they said, they knew who the really good students were, right? And they told the teacher, hey, we're doing an experiment here. And they flipped the script. They said, these kids are troublemakers and they don't get good grades. These kids do. What do you think happened by the end of the year? The good students became shit students and troublemakers. The bad students became A students and non-troublemakers. Yeah. It's what we put out into the universe, right? It's our own perception. And like I said, even in real estate, it's the same story. It's, minorities don't have access to this, minorities don't have access to that, hence they can't do it, right? Yeah. Meanwhile, I'm out there, I'm at that open house yesterday.
Oh, yeah.
3/4 of the people were minorities in the fucking place. The guy who built it is a 20-year-old black kid, built one of the most beautiful homes I've ever seen. I want to sit down with him and say, you feel fucking underprivileged? Somebody fucking with you, man? You're just, you're rolling around. You should have seen the cars that were there. Every single car that was a $200,000-$300,000 fucking car sitting in front belonged to some sort of minority. Right?
Yeah, the story that's out there is that the minorities are at they're at a deficit.
Right.
There are so many minorities that are successful, especially in this community too.
So many minorities.
A lot of people will say this is the racist South, but there's so many.
This country was created by minorities.
Right.
It was. Now, it could have been white minorities,
Right.
Chinese minorities, some sort of fucking minority, right?
But minority.
It was a minority.
Right.
It was a minority. It was religious minority.
Minority, right. They were
Right?
the religious minority.
There were
coming
religious
here.
minorities that first came here, right?
Exactly.
Then it was, other religious minorities that came here.
A certain party only cares about which minority it is.
It is.
But we're all minorities.
We're all minorities. We were all minorities at some point, right?
Yeah.
But that's what makes this fucking country the best country. Because
Absolutely.
it takes the minorities and gives them an opportunity they would have never had to become ultra successful. And I love it. And I think real estate has always been a part of that. And a lot of the success that we see in some of these communities is minorities that got into the real estate game and were able to change their lives and become ultra successful. And I love it. That's why I love real estate. And it sees no color or creed or religion.
Yeah.
Anyone could do it. So, this is episode number 21. Mr. Russell Ali, my guest. And we have to end it. Our producers want to fucking kill us.
All the red herrings.
You've been listening to The Game of Loans, where real estate battles are fought and won. Make sure to fortify your defenses by subscribing. Cash flow is coming, and we'll be back next time to help you claim your throne. The war of wealth continues.